Man, the markets lately. It's like everything's happening at once,
Yeah, for sure.
DeepSeek and all the tariff stuff.
It's a lot to keep up with.
It's hard to even know where to focus. Makes you wonder if there's a better way to see what's actually going on. Cut through all the noise.
Absolutely.
So that's what we're going to do in this deep dive.
Oh.
We're going to take a look at something called the money flow January effect.
Okay, yeah.
Now look, we're not giving financial advice here, of course,
Of course, yeah.
but we are going to see if this whole January effect thing can actually help us understand the markets a little better.
Right.
So, we're using an analysis by Lucas Downey for this. It's from mapsignals.com.
Oh, yeah, map signals.
Yeah, and I like his approach. He's all about data.
He is. He's very focused on the numbers, which
Yeah.
I think is a good thing. Because you can get lost in all the headlines and the hype,
Oh, yeah,
but ultimately it's the data that's going to tell you what's really happening.
totally. And the data can tell a pretty fascinating story, honestly.
Mm.
So let's just start with the basics here.
Mm.
What is this money flow January effect, and how does it work?
All right, so at its core, it really comes down to supply and demand.
Okay.
The basic principle of economics, but applied to the stock market. So when more money flows into a stock, that demand pushes the price up.
Right. Makes sense.
And when money flows out, well, the opposite happens.
Got it. Simple enough.
Yeah.
But how do you actually measure this flow of money?
Good question. So map signals, they've developed this really interesting tool. They call it the Big Money Index.
BMI.
BMI, okay. Yeah, and basically what it does is it tracks these huge institutional investors, the big players. And by seeing where they're putting their money, you get a sense of the overall sentiment of the market.
Okay. So if the BMI is going up.
Exactly.
Yeah.
If it's trending upwards, it suggests that there's more buying happening than selling, which, generally speaking, is a good sign for the overall health of the market.
And Downey's analysis, you said it shows that the BMI is...
Yeah, currently it's on an upward trend.
Interesting. Okay. So the overall market, it seems like it's doing pretty well. But where is all this money actually going? Specifically?
Right, and that's where it gets really interesting. So Downey's report breaks down the money flow by sector, and two sectors are really standing out in January: technology and healthcare.
Those are big ones?
Yeah. So technology is seeing inflows of 19.3%, and healthcare is close behind at 17.9%.
Wow. Okay.
It really seems like investors are they're bullish on those sectors right now.
Yeah. Which, it makes sense, right? We see that in the news all the time.
Yeah.
New tech, advancements in healthcare, it's always a hot topic.
Exactly.
But this whole money flow January effect thing, that suggests there's more to it than just a few weeks of good news, right?
That's right. Downey's research has shown that when you see a strong January, particularly in terms of money flow, it can actually be an indicator of how the rest of the year might play out. Yeah, like a potential predictor of positive returns down the line.
Huh. Okay, I got to be honest, that almost sounds a little too good to be true.
I get that.
Is there something special about January? Why January? Or is it just a coincidence?
Well, it's important to remember, first of all, that past performance is not a guarantee
Right, yeah.
of future results.
Yeah.
But there are some factors that might explain why we see this pattern. For one thing, January is often when companies release their yearly earnings reports.
Oh, right, yeah.
So it kind of sets the tone, sets expectations for the year ahead.
Makes sense.
And also, a lot of investors, they use January as a time to adjust their portfolios, make some changes.
Oh, okay, yeah.
So all that can lead to increased trading activity, which, could contribute to the effect we're talking about.
So it's not just superstition or something.
No.
There's some logic behind it.
There's a reason for it.
Okay, but are there ever years where this January effect doesn't
play out?
Yeah, doesn't play out. And what are the risks if someone's, relying too much on this one indicator?
Well, yeah, it's important to be realistic. While the January effect has held true for many years, it's not foolproof. There have definitely been years where it hasn't panned out the way you'd expect. And really relying too heavily on any single indicator, it's not a wise strategy.
Right.
You always want to look at the bigger picture, consider all the factors before making any decisions.
Absolutely. So, okay, let's bring it back to the listener, the person listening right now. What does all this mean for them? And again, we're not giving financial advice or anything.
Right.
But I think understanding this whole money flow January effect it could be a pretty useful tool, don't you think?
It can be. I think it's valuable because it lets you look beyond just the headlines and get a sense of, where the smart money is actually moving.
Yeah, exactly.
And I mean, if we're looking at this January, it was a strong month, especially for sectors like technology and healthcare, like we were talking about. It really makes you think, doesn't it?
It does.
Like, what companies within those sectors are positioned for even more growth, as the year goes on. And that's something I'd encourage everyone to think about. Use the concepts we talked about today. Maybe do a little research, see what you find.
Yeah, good idea.
Always good to keep learning.
Definitely. All right, well, great stuff. I think this money flow January effect, definitely something worth keeping an eye on.
Absolutely.
All right, thanks for breaking it all down.
Yeah, no problem. Happy to do it.